Now here, another branch of the finance industry has been referred to the competition regulator. The Competition Commission is to launch a full-scale inquiry into the operation of payday loan companies. The number of firms operating in the sector has been growing rapidly, and there have been serious concerns over whether they check sufficiently whether lenders can afford to repay, and over the high interest rates that they charge if they fail. Our business correspondent Sarah Smith has this.
At Wonga.com, you could have money in your account in 15 minutes.
Payday lenders love to promise you money fast. The speed with which they hand out loans is one of the practices regulators want to stamp out. So is time finally running out for these lenders of last resort? Steve took out her first payday loan at 3 in the morning and has regretted it ever since. When the Office of Fair Trading say payday lenders cause misery and hardship, they're talking about people like Steve. As she struggled to pay off her loan, they kept offering her extra cash.
They were offering me more and more money until the point where they were actually physically offering me an amount that, with the interest they would have charged, would have been more than my monthly salary.
People struggling to make ends meet take out payday loans to pay for food and other essentials. Eye-popping rates of interest mean far too many of them then can't afford to pay it back. Payday lenders cause abject misery to thousands of people every year, letting borrowers rack up huge debts, then hounding them to pay the money back, even if they clearly can't afford to. Yet no one seems able to stop them. The problem gets passed around between different regulators, MPs and government ministers, while the payday companies carry on making millions. Today, the OFT referred the whole payday loan industry to the Competition Commission, who may take action against the lenders, but not for at least 18 months. And that's after the OFT have already been investigating them for a year.
We have found fundamental problems in the way that this market is working. We think that the Competition Commission, which has more far-reaching powers than us, will be able to tackle the sorts of problems we see in this market. But let me be clear, this is in parallel to ongoing enforcement work that the OFT is taking at the moment against individual firms where it finds they're breaking the rules.
Once they've completed their investigation, the Competition Commission could cap interest rates payday lenders charge, stop companies rolling over loans multiple times, and they could stop lenders approving loans in as little as 15 minutes. Payday lenders don't compete to offer you the best rate of interest, they compete on speed. But regulators say they cannot check who can afford these loans in just 10 or 15 minutes. Payday lenders could easily change their practices right now. They don't need to wait for all these investigations to be completed. But the industry just wants to carry on making money, doesn't it, until they are forced to change?
Well, we haven't stood still ahead of this Competition Commission investigation. We've put in place a code of practice. On top of that, we've now got an independent panel to make sure that the businesses are meeting the commitments they've made in that code of practice.
Are you not ashamed to stand here and defend these people who are making money out of the people who can least afford it?
What the OFT's done this morning is actually recognise that some parts of the market have already stepped up and in fact suggested that they may be at a competitive disadvantage because they're going further than perhaps the less reputable lenders.
Payday lenders will be asked about their business practices at a government summit next week. But any action to force them to change will take at least 18 months.